I would like to welcome all of you to our today's webinar. It is the first in a session of webinars organized by the Legal Chapter of the Swiss-Chinese Chamber of Commerce. We will do that on a regular basis now, and we will focus on topics in relation to the COVID-19 crisis. We're very, very pleased to have you here at our today's session, and I would like to welcome our two guest speakers. Manuel Werder, he is a partner with Niederer Kraft and Frey, the law firm who is presenting these topics today, and Shu Bernet-Zhang. She's a Chinese lawyer working with Niederer Kraft and Frey as well. Before I give the speech to them, before I hand over to them, I would like, or I need to have a couple of remarks that all of the webinar attendants need to be aware of. Please note that the webinar will be recorded. The chat function gives you the possibility to chat with the panelists. If you have any technical problems, you can contact us there. If you have any questions, please do raise the questions and use the F&Q or Q&A button, whatever is on your screen. Note that you can send questions anonymously. All questions will be visible for the participants. And if you like a question of someone else, please like it, do a like on it. We have all these functions here so we can see which questions are most important to all of the participants. We will address the questions at the end of the session today, but I encourage you to place the questions during the webinar through these buttons. So I think that's all about logistics, and I would like to go right into the middle of our topic, which is state aid. And what we can offer from the legal chapter, we will address these issues from the Chinese and from the Swiss side. So I'm very grateful to hand over now to our couple discussing these issues today. Have a very enjoying and good seminar.
Thank you, Esther. Today, my colleague Shu Bernet-Zhang and myself, we will talk about the measures taken by Swiss and Chinese government in response to the COVID-19 crisis. As you can see at the very bottom on the table of content, our main focus will be the loan guarantees that have been granted by the Swiss and Chinese governments. A second smaller part will cover changes to tax payments and social security contributions. A third part, which we'll only briefly touch, will be short-time work and further measures. And we will compare all of these measures in Switzerland and China. But before we go into that, maybe as a brief overview, there has been drastic interest rate cuts. Central banks and governments across the globe have taken action predominantly in the form of fiscal spending, tax cuts and holidays, large lending schemes, employment-related aids, as well as certain insolvency law-related reliefs to help businesses to weather the COVID-19 storm. Switzerland has not granted so many fiscal spending. There has been one example for the airline, the Swiss, but most of it has been granted by credits, to which we will get later in this presentation. The presentation provides an overview of the measures taken by the governments of Switzerland and China. Cash is king, and we continue to help clients identify how these government measures can reduce their expenses and bolster their cash position. What is important, as a rule, the Swiss state aids, they apply to businesses and companies that are based in Switzerland, regardless of the nationality of the shareholders. So if a Chinese entrepreneur has an enterprise in Switzerland, he is treated the same way as if this enterprise is owned by Swiss nationals. Having said that, we have learned from the politicians, that they're reluctant to grant help to, for example, SR Technics, because as we all know, SR Technics is owned by a Chinese company, a famous Chinese company, HNA, and of course the politicians are a bit reluctant to grant help on this business, unlike they have done with Swiss International Airlines, which is actually owned by the German Lufthansa Group. This presentation does not cover the enfant perdu payments, which, as I said, has only been made to Swiss International Airlines. We talk more about the guarantees, and as stated here, these apply regardless of the nationality of the shareholders. To date, there is no unified approach being taken by the government in different jurisdictions. And for internationally present corporate groups, the key thing to note is that there is no international cap on government aid. So international corporate groups present in Switzerland and elsewhere should have a plan in place to access what they can, where they can. Important is also the interaction with other legal obligations. COVID-19 has, of course, caught governments by surprise, and little thought has been given to the practical implications of a company accessing state-backed lending programs. This means each company should carefully consider how government relief interplays with its existing financing arrangements, because waivers or consents of existing banks who have granted credits or facilities may be required to access the funding. In this situation also, the adherence to the director's duties should not be forgotten. The directors, they need to be well prepared by having a solid understanding of the director's duties and the insolvency framework in the jurisdictions within which their businesses operate. Some jurisdictions, including Switzerland, also have taken steps to adapt insolvency law in light of COVID-19. We will get to this in slide 15 below. So now we jump into our main area, which is the loan guarantees, and we start with the Swiss side. Swiss companies, they can obtain loans, and this is the small and medium-sized companies, so they can obtain loans of up to a maximum of 10% of their revenue, or a maximum of 20 million Swiss francs. Swiss commercial banks, they are required to pay out up to 500,000 per company upon request without any further requirements. So the banks, they do not carry out the credit check, and the federal government will act as a guarantor for the full amount. The interest on this loan is 0%. For loans exceeding 500,000, a short bank check is required, and the federal government will act as a guarantor for only 85% of the amount of the loan. And the interest on the 85% of this loan is then 0.5%, and the interest on the remaining 15% is subject to negotiation with the respective bank. There is no security requirements on the loans up to 500,000 Swiss francs. Because the federal government will act as a guarantor. For loan amounts exceeding 500,000 Swiss francs, the banks may ask for securities. In addition, there is 4 recognized Swiss guarantee organizations who are able to grant guarantees of up to 1 million per company. The bank loans received through the guarantees must be paid, but the Swiss government must be repaid, but the Swiss government has eased the conditions for obtaining these types of guarantees. From the federal government's website, companies can download the forms that they need to fill in. It takes maybe 30 minutes. Now, who is eligible to participate in this program? It's Swiss companies and other Swiss businesses that are not subject to bankruptcy or composition proceedings and have been significantly adversely affected by COVID-19. So companies that have already been in financial trouble and therefore in bankruptcy or composition proceedings, they are not eligible. The purpose is to save companies and to help them come through this crisis, and that there's also a reasonably likelihood that they will continue with success afterward. Then Swiss companies whose turnover in 2019 exceeded 500 million, they are not entitled to apply for the state guaranteed loans. As I said before, the loans is reserved to small and medium-sized companies, and this is how they are defined. For such companies, for the larger companies which are rather large, in-depth reviews and tailor-made solutions are needed. As we have mentioned, some have already been implemented in the aviation sector. For loan amounts exceeding 500,000 Swiss francs, the bank checks the creditworthiness of the creditors. They're also entitled to reject an application, for example, for companies that are already in financial difficulties. They are not in bankruptcy or composition proceedings, which would exclude them entirely, but the bank in their discretion may, if they have financial difficulties not yet reached this level, they may exclude them. Also, of course, if there is any suspect of money laundering or other criminal offense. What are the terms? The debtors must repay the loans within 5 years. If this is not financially feasible for them, the period can be extended to 7 years. The loans are not regarded as debt capital in the first 2 years in the bank analysis, so the debt situation of these companies will not deteriorate. Obviously, they still need to keep in mind that this money will be repayable in the future, but in the first 2 years, at least, the balance sheet does not look as bad. Banks are obliged to inform the government if a company defaults on interest payments or amortization. If losses are incurred, the government must attempt to recover the taxpayers' monies. If an entrepreneur makes false statements or uses the loans in an illegal manner, fines up to 100,000 Swiss francs are possible. The loans are also recorded in a database. And state-guaranteed loans may only be used to secure liquidity needs. So there is a limited number of purposes for which the loans can be used. The guaranteed loan may not be used for investments or expansion of the inventory. Only replacement investments would be allowed. This is to incentivize the companies to repay the loan as quickly as possible and to regain complete entrepreneurial freedom. For as long as the state-guaranteed loans are outstanding, the respective companies are not allowed to distribute dividends or make other distributions. They cannot extend loans, refinance internal or external debt, or pass on proceeds of such loans to group companies abroad. But see the following exception. Swiss companies, they are permitted to extend or repay loans to other Swiss group companies in order to allow them to comply with pre-existing debt service obligations. This would be interest and amortization payments as of the 1st January of 2021. Special rules and restrictions apply for cash pool arrangements. These need to be assessed on a case-by-case basis. This is the last slide on the Swiss side of the loan guarantees. This gives you less legal limitations, but more an overview of what has happened in practice with this, in fact. So the volume of the guarantee scheme by the Swiss government was raised from initially 20 billion Swiss francs to 40 billion Swiss francs. On the first day, banks awarded COVID-19 loans of around 2 billion. By the end of April 2020, about 120,000 loans in the total amount of 16.9 billion were obtained. Since then, new requests only arrive sporadically. So what has been granted by the Swiss government has only used up to less than half of what would be possible. The main reason is that it's not money they receive, it's money which is granted to them, which is lent to them, which they ultimately need to repay. There is 122 different banks that participate in the program. This is practically all banks in Switzerland that are active in the credit business. New requests, they can still be submitted until 31st of July. We don't know whether this may be extended, but so far this is for as long as this measure has been taken into place. Use of the measures, it appears that most of the company that requested a loan did so far only do that as a precaution just in case. Only about 1/5 of the obtained loans have actually been drawn. So they have applied for the loan, they have been granted for the loan, but not yet paid out. But in case of a need, they could then make the drawdown. The great benefit of the loans is, of course, also their symbolic effect. The knowledge of this unbureaucratic financial aid has given the companies some sort of security that they're not left out in the rain on their own. So this would now bring us to the Chinese side of the government loans. And I hand over to my colleague Shu.
Thank you, Manuel. So just before I dig into all the details of the exact measures, I would also like to make a few general remarks. Unlike the Swiss measures where you could clearly see all the detailed cap and time periods or interest rate cap, this detailed guideline, Chinese measures are more given out as a direction from the central government, and the implementation of which will have to be done by the local government, which is usually the provincial one. So companies will have to go through the details of the actually landed in province implementation of these measures, which is why today in my part, I cannot go into the exact details such as, for example, loan periods or the exact interests, but I could only use certain examples just to illustrate how the general measures are being implemented into the province level. So from the Chinese side, of course, I also start with the loan and credit lines, which is essential for business to survive in this troubled time. The financing aid has mainly 3 streams, as you could see from the slides. The first one is the 71.85 billion Chinese yuan emergency response funds. That is approximately, well, less than 10 billion Swiss francs. As now we speak, the exchange rate between Swiss franc and Chinese yuan has again surged to the roof. It's definitely highest in history, like 5 to 10 years, his historical record. So 71.85 billion Chinese yuan is roughly 10 billion Swiss franc. So this emergency response fund is for business that are essential to pandemic control, such as manufacture of medical protection gear, like face mask, understandably. Actually, most of this fund is, of course, used directly into the medical front line, such as hospitals and care units. Only part of it was used to boost liquidity of these essential business in the troubled time. So this is the first stream of the finance aid. And the second one is on 2nd of February, the Chinese Central Bank released in total Chinese yuan 300 billion as the designated credit facility for certain qualified business. The definition of certain qualified business, I'll get into detail a bit later. So these 300 billion funds were distributed by the central bank, which is the People's Bank, like It's like every other thing Chinese always have the peoples in it. The Chinese central bank to a national-wide commercial banks or regional commercial banks. It really depends on the area. For example, in Shanghai, they not only given the fund to what we know like ICBC, they also give the fund to regional Shanghai bank that's actually only has influence quite locally. So the banks, the commercial banks actually manage and handle the loan. For example, they will be dealing with the companies that are seeking loans. They will be assessing their risk exposure, et cetera, et cetera. So the central banks is merely giving the money to the commercial banks for them to do this designated credit facility line. The loan also bears a favorable interest rate and lower fee. And 50% of this interest will actually be borne by the government using public fund from the central budget. The aim of all these measures is to lower the financial cost of the companies who are actually seeking this loan to below 1.6%. In the qualified business, what we're talking about here, you will actually see the definition a lot down the road. It's a saying that used systematically in the Chinese measures. Qualified business are in general those essential to pandemic control. For example, as I said before, those that made medical protection gear, where those actually provide material or equipment to the producer of the medical protection gear. So those essential to pandemic control, and also those that are essential to keep the daily life running as usual. This would be something like public transport or courier services or supermarkets, things like that. There is actually a national index drawn up by the Ministry of Industry and Information. The index will list all the companies that are already identified as this qualified essential business. This is an index at the national level, and also at local level. I think there are roughly about 10 provinces also had their regional index made by the provincial agencies of Ministry of Industry and Information. So basically only companies or business that are included in those two index would be able to have access to this 300 billion designated credit facility, hence the designated in the name. So what happened if a company is actually not on the list when the whole thing's being rolled out is, in principle, these businesses should go to a commercial bank seeking a normal route financing as a start, and the bank who are receiving these requests would then coordinate with the respective governmental department to see whether the company would actually be qualified and can be added to the list. This actually happened a lot when, for example, a cloth maker who actually did not produce any medical protection gear before, but in light of the COVID situation, they started producing masks. And due to this fact, they would actually be able to add it to the list after submitting, and of course, enough evidence that actually they are now also contributing to the pandemic control. And as we're speaking now, this funding program is basically concluded already. As I mentioned before, because the central budget, the government fund is providing 50% of the interest. So they're actually collecting the actual data of how much they need to do, how much they need to put into the pockets of the bank. And this calculation of the public funds needed to contribute to the interest payment has already ended by, I think it's end of May, 31st of May. So, and then the central bank working together, all the commercial bank, they're already working towards following up with all the companies, all the business that have actually drawn this special credit facility to see the implementation. Because of course, there are various restrictions on what you can do with the money, which I'm not going to detail here, but the gist of those is business should not use this money for activity that are not related to pandemic control. So for example, you can't use it to repay your outstanding credit line that you already have. So that being the second stream. And the third one is of course, guarantee related. So various state-backed loan guarantee scheme has been rolled out, and the discounted interest rate policy also is applicable again to certain qualified business. And the implementation of this is, of course, on the province level and is different from industry to industry. For example, Shanghai has provided an interest cap for 4.55% of the credit facility expanded to qualified business. What the 4.5% interest rate may seem a bit high to us here in Switzerland, but let's bear in mind the 1-year benchmark interest rate for bank lending in China is currently 4.35%. And 1-year deposit benchmark interest is actually 1.5%. And this is already after the very late diving from the central bank that happened in May. So 4.55% is already considered a barely nothing, a very low interest rate. So this special interest rate can be given to the qualified business that apply for commercial loan from 14 Shanghai-based banks and building societies. And Beijing has also lowered rate of guarantee service charges for guarantee services provided by the state-run non-bank guarantee service provider. So basically, there's this guarantee service provider organization in China that actually part of a national organization, like a publicly owned business, etc. So this would be a guidance to those already state-run guarantee service provider. There is so far not really a nationwide principle on how other non-state-owned commercial guarantee service providers should do with their guarantee service charges. And then example of an industry-wide measure would be civil aviation, of course. Flights to and from China during the pandemic time, and also those who paused a bit and resumed already during the pandemic time could receive incentives such as allowances or subsidized. Usually is calculated by the mileage of the flight and seats counts of one flight. It would apply for those that are jointly operated or just run by one company. And this would actually apply for all civil aviation companies that operate routes to and from China, regardless of whether they're foreign or Chinese. But of course, most of these allowances ended up with Chinese airlines anyway, because as you all know, not many foreign airlines keep their Chinese operation. Basically, all of them suspended the Chinese routes and has not resumed yet. So although this would be a benefit also available for foreign companies, it has not been practiced like that due to the current situation. So as a general rule of thumb, business and companies, they should really consult local policy on the actual benefit they're able to enjoy. And as I always mention, this qualified business definition, basically everybody who can enjoy this kind of benefit would already know it by now. Smaller business like SMEs, they might be able to benefit with further measures, which is not yet here so far. With central bank is of course talking about additional financing aid provided for SMEs, but that is not only in line with the COVID-19, but also as a general macro monetary policy tool. So yes, that concluded all the financing aid overview for China. And I give back to Manuel, and now we can talk about some further measures.
Thank you. We come back to Switzerland and we come to the topic of tax payments and social security contributions. This is just a short remark and one slide that we have on Switzerland. So basically, companies that are subject to a Swiss taxes, they can apply for a tax buffer. This applies only to the federal level. The cantonal regimes, they are not harmonized and they vary from canton to canton. But the Swiss federal government, they have implemented a liquidity buffer for tax payments and extended payment deadlines without interest on arrears. Therefore, the interest rate on VAT, customs duty, steering taxes, and certain other taxes, they will drop to 0%. The interest reduction is applicable for the period from 1st of March to the end of the year 2020 for the direct federal tax, and for the period from 21st March 2020 until the end of the year 2020 for VAT and similar taxes. In addition, the companies, they are entitled to a temporary and interest-free deferral of payments for social security contributions. Keep in mind that companies, they typically need to pay already in January of each year the entire sum of all social security contributions which they will need to pay for the entire year on the entire salaries paid to the entire workforce. So that is a huge payment at the beginning of the year, which relates to salary payments only done in the course of the year. So they have, so this is a big relief for liquidity, and these companies, they have also the option of having their regular account contributions adjusted if their aggregate salary payments decrease significantly. So if they have layoffs, they can of course tell the government about this, and therefore have a lower down payments. Usually this is only done at the end of the year. That would for 2020 would be in 2021. They would then say at the end we have spent less salary as we initially thought, and then this would be paid back. So this can be done much earlier now. This is all that I have to say on tax payments and social security contributions about Switzerland, and I hand back to Shu, who covers the China aspect.
Thank you, Manuel. So let me start with the tax part. Qualified business, again, this definition is similar as what we encountered before, means those included index prepared by the Ministry of Industry Information. So qualified business can take the cost of production infrastructure acquisition that was conducted in connection with expanding producing ability in light of the pandemic control as a tax deductible for the income tax. So this will be something, for example, like a cost they have to pay for extra hands, like extra employees, or the double or triple salaries they have to pay for employees for the extra hours they have to work on the production lines. The context of this also being when the whole COVID-19 situation started to flare up, China has actually was actually on a nationwide holiday, one of the longest one regardless. The Chinese New Year break. So what happened is basically everybody who works in the factory would already be thousands of miles away back at home, and no one would be actually start to operate a producing plant, for example. So at that moment in time, many companies also not only have to pay their existing employees who were willing to return to work double, triple salary, they also have to hire on the spot some people who were able to or willing to help at that time of the time, at that period of time. So that will be one of the examples of this cost, because by acquiring production infrastructure, we're not only talking about those equipment, it also includes labor costs. Also, for example, a cost that a company spent to buy new production line to expand the production power of medical protection gears is of course also included in this cost. Cost to buy additional material because of expanding of the producing power, which is of course also included in such category. And qualified business can also apply for refunds for certain tax benefits generated after 1st of January of 2020. So basically, those paid in entire January before the whole situation flared up can be claimed back as a tax benefit if the company were to be qualified as a qualified business down the road. And there's of course certain VAT relief for logistics services provided in connection with pandemic control. And for business that provide services that are of daily necessity, for example, core services, taxis, supermarkets, small clinic for community. And business are also they could also apply for tax relief if they are materially affected by the pandemic. It's an interesting definition here because there's no clear way of how could you qualify as materially affected by the pandemic. But most of the time, these are restaurant and hospitality industry business that are, of course, like tourism, because usually the Chinese New Year holidays also big for tourism to boost. But now with the whole thing, even at this moment where we're speaking, the tourism industry in China has not fully revived yet. And these businesses that were materially affected can carry forward losses generated in the year 2020 for a maximum of 8 years, which usually they could only do for 5 years. And of course, each province is also authorized to grant small and medium-sized taxpayers, which doesn't have to be established business. You could also be sole trader. Certain discount tax rate, exemption, or deferral on income tax, also include the withholding tax as payable. This is basically one of the very few measures that would actually benefit sole traders or small business owners that have not put themselves together or organized themselves into a form of a company or partnership. Because those, sorry, this is just dry throat and hay fever, nothing to be alert of. So most of the measures, as you could see before, they're only applicable for qualified business. And I'm saying business here just to have a round figure, but most of the time, of course, these are companies. And sole traders, self-employed person, and small business, for example, food, like a street food stand, they who were of course not organized into business or partnership would have severe difficulty to access more flexible funding or to benefit from these emergency response measures, which is a actual situation that needs to be addressed urgently in China, because it's the people that suffer the most are these people that run a smaller business. So come back to the slides, and each province is also authorized to grant small and medium-sized taxpayers. Is the word taxpayers explicitly used in the guideline menu, so which provides, as I said, one of very few relief those individuals can enjoy. And the last point on tax is certain custom and other import tax or charges of similar effect would also enjoy relief for those goods that are imported in connection with the pandemic control. You probably also are aware of that when the whole situation just started. Basically, China was looking to buy medical equipment across the globe. It would be, of course, ridiculous if these imported goods would still be subject to a high custom or other import tax charge. So these are basically all the measures applicable in the tax area. Local business, as I said before, should definitely consult the provincial guideline on how things are exactly implemented. But usually all the measures local province is providing for business are summarized into a very brief, concise little brochure that's easily accessible online. And those little brochures or pamphlets will also include the contact detail of people they can talk to, or department they should apply for. So the actual implementation would not be as what we see in the slides at a very high level. Business would definitely know where to go and what to look for. And another essential part of the contribution relief is the Social Security contribution reliefs. So the Chinese Social Security system basically have two types of contributor, one being institutional, another being individual. Institutional contributors, those who employees, of course. So It's kind of similar to the to the pension obligation here in Switzerland. Chinese employer also need to pay pension contribution and certain amount of the public medical insurance, a certain amount of injury that sustained during the course of employment, insurance for that kind of injury, and also insurance of loss of employment. These would be the basic social security contributions any employer are obliged to pay. So companies that are experiencing difficulty in operation due to the COVID-19 pandemic can of course apply to a deferral or holdover of the social security contribution that is due. So in short, there's no discount on that exactly, but you can just pay it later. Not later than 6 months in general. And usually the penalty that would have accrued on those late payments will of course not apply in this situation. But this is not a automatically applicable regime. Companies still have to go to the local Department of Labor and Labor Protection to apply for this relief. Each province other than Hubei province is authorized to grant small and medium-sized enterprises exemption from making social security contribution for no longer than 5 months, and to grant larger-sized enterprises and other institutional participants without including governmental departments and public institutions such as public hospital and university, etc., a discounted rate of such social security contribution, 5% less, for no longer than 3 months. And the same would apply for Hubei province just for a longer period, for no longer than 5 months. All these measures started from the beginning of February 2020. Technically, social security contribution already paid in January is possible for a business to claim that part back, but the implementation, of course, also varies from province to province. And as I said, once again, local policy should definitely be consulted. So that concludes all I have to say for tax and social security contribution relief in China in light of the COVID situation. Now I hand it back to Manuel.
Thank you. We now get to some more measures that the Swiss government has taken, but we touched them only briefly, especially what is on this slide, which is the halt on debt collection procedures. I understand this will be part of one of the next webinars organized by the legal chapter of the Swiss Chinese Chamber of Commerce. That's why we only have it here pro memoria, that there is a simplified temporary, i.e. about 3 to 6 months debt restructuring moratorium and deferral of duty to file for bankruptcy, each subject to certain conditions. This applies to both companies and individuals in Switzerland. However, certain privileged claims, for example, salary claims, they are not covered by COVID-19 related moratorium rules. Obviously, salary claims are important that they are honored in order to avoid further economic problems. Another measure that has been taken so far was that the rental payments for residential and commercial real estate can be paid within 90 instead of 30 days. This applies to rental payments due between 13th of March and end of May. The bigger measure is, of course, not the payment time, but the payment itself. And there the Swiss Parliament has debated back and forth. And there have been various proposals on the table, and so far no solution has been found. But just now this morning, the Swiss National Chamber, they have proposed that during the time of the lockdown, when businesses were not allowed to operate, that they only pay 40% of the rent that has been due for this time. 60% would then need to be borne by the landlord. This is for businesses up to that need to pay rent of up to 20,000 Swiss francs per month. So this is the proposal of this morning that is currently on the table. So maybe this will be the ultimate solution. We don't know yet. Another field that I would like to touch, which was also a response of the government to COVID-19, which is very heavy, is the short-time work. I have one slide on this to give you an overview. So companies, they can apply for compensation via their insurer for 80% of the costs of the employees' wages, which is attributable to the reduction in working hours as a result of the COVID-19 pandemic. It's kept at the maximum insurable salary amount of 12,350 Swiss francs per month. The scheme relates to employees who are in a non-terminated fixed contract or in a temporary employment relationship, or completing an apprenticeship, or employed on a temporary basis, or in a management position. The measure is in place for 12 months. The government is in discussions to extend this to 18 months because some companies, they have already been in short-time work before the crisis started. So the 12-month period may end sooner than for others, but so far that this rule is in place for 12 months. It's basically a rule that is in place anyway, so that has not been implemented new as a COVID-19 response, but it has of course been of much further practical relevance. Who is eligible? It's companies in Switzerland. They must provide credible evidence as to how the expected decrease in work in their company relates to COVID-19. So there must be a causal link between the work stoppage and the reduction and COVID-19. So if they are generally in trouble, they are not eligible. It must be an outside event, just like the pandemic. But if they're just if their business is just doing bad for their own fault, let's put it this way, they would not be eligible. This has resulted in a very high demand. So until present, short-time work has been applied for almost 2 million employees in Switzerland. This is about 37% of all employees nationwide. So this is a huge number. Of course, not all of these employees, they are on short-time work. It has just been applied for, and not all of them. So in case of a need, they could go on short-time work, but not all of them have done so. Government has spent 25 billion until yesterday on this short-time work measure. This is very important to avoid layoffs in these types of times like we have seen in the United States, so where the unemployment rate has gone up to 25%. So the purpose is that people keep their job, they work less, the government pays, and the purpose is really that this is just done for a temporary measure. So as I said, 12 months, maybe a little longer. Together with the measures that are on the following slide, the government has spent so far 31 billion Swiss francs on COVID-19 responses, not counting the loan guarantee that we have discussed at the beginning of this presentation. The other measures, they are similar to short-time work, but they cover people who are not employees, so they would not be covered by that. So we have first the compensation for parents. So if they need to stay home because their kids are on homeschooling and they're not able to work, so they can apply for this. It's 80% of the average income, but not more than 196 francs per day. There's a grace period of 4 days, and they must have children under the age of 12 who require leave of absence from their, and the parents must require leave of absence from their employment because third-party care of the children is no longer guaranteed. Another category is the compensation for loss of earnings. This has applied, for example, to taxi drivers, etc., who lost earnings, although what they have done, their business was not in a lockdown, it was still allowed, but of course there was no demand because there was no movement. This applies to employed and self-employed persons. No, sorry, I have dropped. This is another measure which applies to employed and self-employed persons who require leave of absence from their employment because of a quarantine measure. This is separately from what I said to the taxi drivers. They have the same allowance per day, which is 196 francs, and this is limited to 10 daily allowances. And then the last, I was jumping ahead before, this is the compensation for self-employed persons. So they can ask this for up to 2 months, also a compensation of 80% of the average income, but not more than 196 francs per day. This is, as I said before, even if either it's due to a closure of their business, of the ban, ordered by federal law, or if this is the result of the corona pandemic, irrespective of whether their professional activity has been prohibited. Government has spent so far 600 million on this measure, and this is still in place until mid of September so far. So that concludes the measures we have on Switzerland. We have one last item that we would also like to add for the sake of completion for China before we can get to the questions that you may have.
Yeah, thank you, Manuel. Yes, as Manuel correctly puts, this is put here more for the sake of completion, because this is again very general and varies from province to province and actually does not benefit that many business as the other measure actually do. So it would be just a leniency on government procurement. So the government procurement procedure now is done in a more swift, does not have to necessarily follow the rule of the normal government procurement procedure if those concerns pandemic control, for example, a construction project of a temporary hospital and caring facilities, or procurement of medical protection gears to be used in areas that are drastically affected. And during the course of these government procurement procedures, certain business would have kind of a more favorable position. Of course, given that they could have the job done as much as the other bidders. These businesses are typically those, for example, are in the areas that are affected the most, or those businesses that put themselves together the first among their peers that to manage to speed up in their production lines, etc., etc. So the actual implementation of this is very subtle, and it really depends on what kind of project it is. So we merely put it there just to give you a fuller picture. And in China, there isn't really a counterpart of what we know as a short-time work here. And also the Chinese pension fund and loss of job insurance fund are not actually also drawn or used in this way. That would actually conclude everything I have to say regarding the Chinese measures. As the situation are getting better and better over there, many of these measures will become out of date soon. And to rebuild and reboot the economy now more depends on the general monetary policy, hence the drop of the benchmark interest rate very recently. So we all shall observe how the situation develops over there. But in light of the COVID-19 situation, the measures are basically more or less coming to an end soon. Yes.
This brings our presentation to the end. Thank you very much for your attention. I have already seen one question from the audience. Shall I proceed to answer it or give back to Esther?
No, yes, please go on. If you can answer directly, that's fine. We only have one question, don't we?
Okay, yes, so far. This is about the rental payments of, I think that was here. What is discussed at the level of the Swiss government and also at the level of the Swiss Parliament is whether the period during the lockdown, so that would mean March 13 or March 16 until 8th of May. It depends on the business. Some have opened end of April, some have opened 11th of May, some will open next week. That's the period we talk about. And the 40/60 solution would cover this period. So it would indeed apply retroactively to this period. The Swiss Federal Council, our Bundesrat, the government, they did not want to interfere there with the landlord and the tenant. He said they should find individual solutions. The Swiss Parliament, there the tendency to impose solutions, industry or even throughout all industry specific or throughout all industries, the pressure was higher. There have been different proposals, and this is now one from the national chamber from this morning, which seems to be a compromise. So there is a fair likelihood that this will maybe go through. Some government-owned premises that are rented out. The government has already, for example, the Canton of Zurich or I think the Cantonal Bank of Zurich, they have already waived some rental payments, but the solution here is more between private owners of premises that are used by private owners who have, for example, a restaurant or another business that has been locked down. So I see there is an additional questions. Do Swiss subsidiaries in China active in the consulting sectors have a chance to get financial support from local government and or banks? I suppose, I mean, these are Swiss subsidiaries in China. That would now be a question for Shu, whether Chinese government would grant them financial support if they are in the consulting sector.
Well, from so far what we can see, there's no specific financial support targeting the situation brought by COVID-19 for consulting sector. Usually, as I mentioned, business that are not in the qualified business category should, in general, just proceed with the normal financing. Will go to the banks, etc. There's always lending facility available at the banks. Local government usually would have like a boost funds for small and medium-sized business. It really depends on what kind of what legal form is this Swiss subsidiary. If it's nearly established as a branch office or representative office, then I would say the chance of getting any commercial loans even lower than if you were a properly established foreign-owned business, like company form or local partnership, etc. So it really depends. And also depends on where the business is. Local government might have already given out some guideline in their support to boost the economy in general, which if it applies to consulting sector, then you probably would definitely have a chance there. For example, I know in Shenzhen and Guangzhou, there are actually guidelines on more generally available financial assistance at a more favorable discounted rate. I did not go into detail in these local guidelines because they're just too much into detail, and that would be definitely too regional. So I would say a first step, consult local authority. But as a general rule, I did not see something that would just out of the top of my head say, yes, there's this and that kind of aid you could go for. Yes.
But if this is, the question is Swiss subsidiary in China, so I suppose this is a subsidiary in China from a Swiss company. The Swiss company, of course, can ask here in Switzerland for financial aid if they fulfill the respective requirements. So if it's two companies, one is the parent, one is the subsidiary, that whichever is in Switzerland could ask for the aid. Absolutely,
yeah. And as you mentioned before, there's no global cap on how much they could get.
Exactly. Yeah. One question is whether we can make the presentation available to participants after the webinar. We can gladly do so, no problem. I suggest we send it to Esther Nägeli, and then because you have probably the list of participants.
Yeah, we will take care of that. The Secretariat will then take care of that. Yes, please do so.
Okay, we will send it to the SCCC Legal Chapter.
We do not see any more questions, so I think we are going to conclude our today's session. I would sincerely like to thank Manuel and Shu for their great presentations today. I thought it was very nice to see that both countries address the same issues. I thought it was also nice to see a bit the comparison, how each country does it in relation to their own background and necessities. So I thought it was very useful to us, and I hope to the participants too. I would like to thank everyone, all the participants, and again our speakers, our organizers from the Secretariat. And I hope to see you at our next webcast, which will be on the 25th of June. And it will be on the duties of Board of Directors during the COVID-19 crisis. So thank you all very much and hope to see you again in future. Goodbye.
Thank you also from our side for attending, and have a good afternoon. Bye-bye.
Thank you. Bye.